According to an analytical report by the British newspaper The Guardian, these companies are making more than 30 million in extra unearned profit every hour by capitalizing the war. Since the war began, ExxonMobil's market value has surged by 118 billion. To counter this, several European Union countries including Germany, Spain and Italy have called for imposing a special windfall tax on these war profits. Taking advantage of the volatility in global oil prices caused by the recent Iran war, the world's leading energy companies are racking the enormous amounts of profit. This once again reveals a harsh truth. Instability and war in global politics spell crisis for ordinary people, but for big oil and gas companies, they act like a blessing. According to an analytical report by the British newspaper The Guardian, these companies are making more than 30 million in extra unearned profit every hour by capitalizing the war. As always, Saudi Arabia's state-owned oil giant Aramco tops the list in terms of profits. According to the report, due to the impact of this war, Aramco's additional profit is projected to reach approximately 2.5 billion by the end of 2026. Assuming oil prices average around 100 per barrel. Despite Western sanctions, Russia's three major oil companies are expected to earn nearly 23.9 billion in extra profit by the end of the year. Notably, in March, Russia earned about 19 billion from oil and petroleum product exports for the whole month, nearly double the previous month. US oil giant ExxonMobil is on track to make 11 billion in extra profit this year amid the wartime situation. Another American company, Chevron, is projected to earn 9.2 billion. The impact has also been huge on the stock market. Since the war began, ExxonMobil's market value has surged by 118 billion. The UK-based multinational Shell is expected to see an additional 6.8 billion in profit. Since the start of the war, the company's market value has increased by approximately 34 billion. According to data from energy research firm Rystad Energy and Global Witness, when oil prices reached 100 per barrel, these companies earned an extra 23 billion in just 1 month. This vast sum is essentially coming from the pockets of ordinary people. Households are bearing the cost of this war through higher electricity bills, increased transportation expenses, and rising prices of daily essentials. As Patrick Galley of Global Witness put it, a global crisis means extra profits for oil companies and ordinary people pay the price. Fatih Birol, head of the International Energy Agency IEA, has described the current situation as one of the biggest energy crises in history. To counter this, several European Union countries including Germany, Spain and Italy have called for imposing a special windfall tax on these war profits. Experts argue that this crisis has once again exposed how risky our heavy dependence on fossil fuels is. According to the Energy and Climate Intelligence Unit, solar or wind energy does not depend on wars or disruptions in sea routes. Therefore, the long-term solution lies in reducing reliance on oil and gas and rapidly transitioning to renewable energy. Only then can the world free itself from this hostage-like situation.